The next topics with respect to the related party, connected party will be taken over by my colleague Balram. So Balram, I would request you to take over the next topics.
Thank you, Manish. Let me share my screen. As Manish mentioned, so we'll be looking at the connected persons and related party payments quickly. So who are related parties? So related parties, an individual who owns 50% or more shareholdings in company A, then this individual becomes related party to company A. At the same time, company A owns in company B, and A and B become the related party, provided that holding is more than 50% in company B, or the ownership or control is more than that 50%. Or company A can be owning company B as well as C, in which case A, B, C, all of them become related parties. So it could be between juridical person and natural person, or it could be between juridical person and another juridical person. So all these become related parties for the purpose of corporate tax purpose. So there's a concept called connected persons also in this, which is not generally been mentioned in other corporate tax laws in different countries. But here, since we don't have any individual corporate individual taxation or tax on individual income, so they had to bring in these connected persons. So a owner of a company, and directors and officer of a company, and their relatives. So they become connected persons to the company. So this is what is the definition of connected persons: a owner of a company, or a director, or an officer, or any relatives of these set of people. So all they become connected persons to the company. So why are we talking about this? So because any transaction that company does with another related party, or a company does with a connected person, that transaction should be made sure that it is at arm's length. So a connected person or related party, there is a possibility of influencing the rate of the transaction in order to get the taxation benefit. So in order to avoid that, the law has brought in this concept where any transaction that happens with related party or with connected person should be at arm's length. So let us quickly look at one example where company A is doing business with company B, also doing with company C. Company B is a third party, whereas company C is a related party. Okay, so that's the setup. So company A is selling product A to company B, which is third party, at 20 dirhams per unit. Whereas the same product is sold by company A to company C at 10 dirhams. Remember, this company C is a related party. So now we need to say, so the same product is sold to B as well as to C, but the rates are different. So that should not be the case. So whatever is sold to company B is at arm's length, or is it market rate? Let us assume that. So even for company C also, instead of selling that at 10 dirhams, it is supposed to sell it at 20 dirhams in a simple language. Okay, so since now company C is buying, company A is selling to company C at 10 dirhams, we need to make sure that the price that is sold to company C is also at arm's length. So this is a plain example, but in real scenarios, so you may not be able to identify that benchmarking rate so easily. So there are various different methods that have been given as to how you arrive to this arm's length price. So I've listed down the list of the methods that can be used to arrive to this arm's length price with respect to transactions with related parties and connected persons. So you could follow comparable uncontrolled price method, resale price method, cost plus method, transactional net margin method, transactional profit split method, or any other method which is most suitable. So by following one of these methods, you should be arriving to the arm's length price, and then apply that arm's length price to the transaction that you deal with, related parties or connected person. In your books of accounts, you may account that at whatever rate you want to, but for the purpose of corporate tax, you need to make adjustment to those transactions to be able to be in line with arm's length price. That is what is the concept. So these are the list or illustrated list of payments that may happen or that a company may pay to the owners or directors. So in this part of the region, so it is very common that a owner of a company may work in the company and may also draw a salary or a perquisite. Or it may so also happen that the owner from his own property, his own property, he may rent it out to the office and then in turn he collects the rent from the company. So though he is the owner of company, since he is providing service or since he is giving his own property as an office to the company, so he may take the salary or he may take a rent from the company. Or he may also give loans to the company and then charge interest on those loans. So you as a owner of the company, you are considered as a connected person to the company. So whatever payments company is making to you in terms of salary, perquisite, rent, or interest, all those payments should be looked at and made sure that they are at arm's length or at market rate. So the arm's length principles, as I mentioned, we have various methods to follow to be able to arrive to that arm's length pricing. So we need to make sure that they are at market rate. So how do we arrive to market rate? So generally, in general understanding, whatever services this owner is providing to the company. So whatever is the qualification of this owner. So by considering the services that owner is providing to the company and the qualification and experience of the owner, and also we need to look at the size of the company, type of industry, and in this region, the same kind of services if someone else is providing, how much would be paid as salary to that third party? Are we paying the same amount of salary to the owner or not? So that's how we arrive to this benchmarking. If you are making any amount more than this benchmark amount, we need to make adjustment while computing the corporate tax to your salary amount. So that you are only taking that amount which is at benchmark at market rate for the purpose of computation of corporate tax. That is what we have to do. So these are some of the mostly happening transactions within group companies or between related parties. So in terms of services, maybe you'll have let's have an example where you have a Etisalat connection made or took on a company name, whereas these SIM cards and these connections have been used by various companies in the group. So this company where the account is opened is going to pay the entire amount, whereas the benefit or service has been taken by the other entities in the group. So now we need to allocate this cost by company which has taken this contract to the other companies which are using these services. So that is a kind of cost allocation. Not only that, like centralized finance function of the group. You may have one entity which is a holding company or a main company of the group, under which you must have taken various financial facilities, whereas the benefit or the funds have been utilized by various companies in the group. So in this case, the company which has taken the facility is going to pay the cost of those financing or facilities to the banks, but the service is since benefited by others, so we need to allocate this cost. Likewise, employment contract or labor contracts. One company may be having employees who is going to work on for the companies of other companies in the group. So these kind of arrangements may happen within the group. So for the purpose of corporate tax, if they are not part of the same tax group, we need to make sure that this cost is been allocated to various entities in the group based on the benefit that they have been taking. For those transactions or allocations, we need to come up with a benchmark. We may have to have some markup to add it to that and then arrive to that benchmarking rate arm's length pricing. So not only that, as I mentioned, salary payment to the owners, so that should be at arm's length or at market rate. Or if let's say that a company in a group is buying electronics and then those goods have been supplied to other group entities. So in which case the price of those goods, the cost of those goods should be allocated among the group entities which are buying those from this main company. Likewise, if a company in India is taking loan, but funds have been provided to other company in UAE, which is part of the same group. So there also, whatever service that Indian company is providing in terms of loans, so the cost of that should be charged on to a company in UAE. Of course, you may have to have markup added to that based on benchmarking. So these are the general commonly happening transactions in terms of related parties, which requires arm's length pricing to be done or taken care of. These are the other kind of transactions that you may have in terms of services, goods, tangible properties being used by companies, various companies in the group, though they may be owned by one company. financing facilities arrangements or intangible property owned by one company but used by other companies. So in this process, you may have transactions, this kind of transactions you may have among the group, but being used or benefited by other companies. So you have to make sure that you have a policy in place for the entire group with respect to your transfer pricing and transactions with related parties and 100%. And the charging of the cost or rate of those transactions are dealt with at arm's length. So that is what we need to comply with.